Crypto is racing up, but there are some high tensions as there are new lawsuits in the crypto industry from the SEC to some very important players. We also have some good news about FTX assets. Now they're going to get probably even more money back, the people that have cryptocurrency on the platform that's locked up. We also have some big news from Tesla, really creating a masterclass on supply and demand and game theory. So we have to hit on a lot of that, including some bank earnings that just happened and some other news from the crypto industry as well. So if you don't mind hitting the subscribe button underneath the video, I really appreciate it. That way you can see future videos and turn on that bell notification so you know right when I post a video, because some of this is time sensitive. There's also a link down there to moomoo in case you want some free stocks, and there are links to a couple different crypto exchanges in case you want to trade on margin. Now, of course, only do this if you are an experienced trader, but there's a link to BitGet and to Margex underneath the video. Of course, I take my long-term crypto off the exchanges. Probably not a good idea to leave a majority of your crypto, but if you do want to trade, that's where you can do it. Now, Bitcoin is still holding strong, almost at 19,000. We hit 19,000 yesterday, got rejected, but we're still sitting in the green for the day. A pretty good last week or so, I'd say, for Bitcoin. We did jump above this $18,400 resistance that we had seen previously, got rejected up here, but I would look for us to flip 19,000 into support and then race back up to 20,000, and then we have this other key resistance here around 20,400. So pay attention to that. Now, other cryptos are up as well, but Bitcoin's really leading the way over the last 24 hours. You can see 4% compared to everything else, which is 1, 2, 3. Of course, there are some that are up a little bit more, but this is causing the Bitcoin dominance to go up. Second, or actually fourth green candle in a row, but yesterday we had a large candle and then another green candle here today. I would be looking for us to break that 42.35%, and then who knows where we could go from there, but it does look like dominance is going up as people pile into Bitcoin a little bit more aggressively. Now, one of the things that we've been covering so much recently is the GEMINI Genesis debacle. Now we have to add to that because we just got news of the SEC charging Genesis and Gemini for the unregistered offer and sale of crypto asset securities through Gemini Earn. Gary Gensler says crypto intermediaries need to comply with our securities laws. This protects investors. It promotes trust in markets. It's not optional. It's the law. However, this is coming right after this whole blow up. They didn't do this when things were good and these companies could pay. They're now filing and suing when Gemini is trying to get money back for their users. And that's what Tyler Winklevoss says. As a matter of background, the EARN program was regulated by the NYDFS, and we've been in discussions with the SEC about the EARN program for more than 17 months. They never raised the prospect of any enforcement action until after Genesis paused withdrawals on November 16. Now, I kind of understand why they would do this. They're saying, hey, now that you've paused withdrawals, there's cause for concern. We're going to fine you for that. But it is really bad timing because it adds insult to injury. It makes it more difficult for Gemini to get assets back from Genesis. If Genesis is also getting sued, that's probably going to be their number one priority, is to pay that off. So it's really not a good situation. And supposedly this is a bigger problem than a parking ticket. And according to this source, all investors can claim right of rescission based on the EARN product being dubbed a security, and they are expecting a filing to this aim quickly. So we'll have to see what comes out of this, how big the fine is. BlockFi had a $100 million fine. So this is, again, just going to make it harder and harder for these companies to make it through and to be able to pay back their users, which is really scummy in my opinion from the SEC, the timing of this all. Now, we also have some other companies that are being affected in crypto with the recent FTX collapse. We have Crypto.com announcing a 20% cut to the workforce. We've been seeing this from so many different companies, and it's not surprising. But traditional finance is also getting hit hard today. Citigroup said their fourth quarter net income decreased by more than 21% from a year ago. Their shares are falling 2.1%. And the reason for this is the investment banking is falling down dramatically. And this is even outdoing the fact that there are higher interest rates. Usually, banks do really well in a high interest environment, but they had so much income coming from investment banking over the last couple of years with a lot of the IPOs and with a lot of the SPACs and all of the other things that were happening in the market. JP Morgan is also down 2.2%, and they actually beat on earnings and they beat on revenues, and they're still down after their earnings as well. They expect higher spend next year. A lot of other banking companies as well gave their earnings today. Now, speaking of companies that are going down as well today in the pre-market, Tesla is down 6%, and I'm assuming they probably will fall even further. They announced big price reductions. So last week, I think it was, they announced the price cuts in China, but now they have massive price cuts in the US. And I did a video talking about some of the benefits for that. Like, we saw a massive red day when that happened. I think we hit the low maybe even that day as well. But how that actually benefits Tesla is a pretty interesting subject. And I'll link that video on the end screen because it applies to this as well. But we have some big price cuts. For the Model 3 rear wheel drive, we have a 6.4% price cut. Now, this means that with the tax credit, it's like $35,000, $36,000. The Model 3 Performance is $53,990, down about 14.2%. Model Y long range, $53,000 from $66,000, a 20% drop, and Model Y Performance is down from $57,000 or down to $57,000 from about $70,000, so a 23% drop. Now, this is obviously going to help Tesla sell a lot more vehicles, but it's going to hurt margins drastically, right? But their process or their line of thinking is that they are going to continue to sell cars as long as they're making some money, and that way they can eventually sell upgrades later. They can sell full self-driving and make that margin back, hopefully, in another way. And it makes more sense for them to get more cars on the road. So while this is going to hurt short-term their earnings per share, this is going to allow them to sell and have a lot of demand. I mean, a 23% price drop gives you a lot more demand than 23%. When you start looking at these prices, they're similar to a lot of other, or they're lower than just about every other electric vehicle, but they're similar to a lot of the other kind of luxury traditional cars. And now you can get some of the coolest cars on the road and some of the fastest cars on the road. And you'll save money over time from maintenance and from electricity versus gasoline. This helps them, I think, in a lot of ways that people don't see. This is going to strangle, I think, the other car manufacturers that are selling electric vehicles. They'll probably be able to still sell some of them, like Ford and GM, if they're at lower production, because people will still buy them just to say that they have the new Hummer EV and stuff like that. They'll pay a lot more. But the majority of people won't buy that versus a much cheaper Tesla. A lot of people want Teslas, and this is just giving them more and more of a reason. I mean, when you take into account some of the tax credits as well, if you looked at getting a Model Y Performance at $70,000 6 months ago, now you're looking at $49,000. You can cut 30-40% off that when you account for the tax credit. I'm assuming their wait times will go up. And like I said, it's going to cause a lot of pressure on the other car manufacturers. And while everything is going EV, they're going to have this terrible time where they either have to go EV and lose a lot of money, and they're already doing that, some of them, or they're just going to have to wait it out and hopefully, we get out of this recession or this difficult time, and then people are willing to spend more money on vehicles again, especially because rates are going up as well. So it's harder for these car manufacturers to sell vehicles on loans. So that's probably a long-winded way of saying that this is going to hurt Tesla short term, probably going to cause the stock to drop massively today. But over the long term, it really doesn't affect them. And I think it actually makes it harder for other car manufacturers to compete. Now, moving on to good news for anyone that has money locked up in FTX. FTX is now allowed by the bankruptcy judge to sell LedgerX and other assets, including FTX Japan and FTX Europe. Now, this is really good news. They recently said that they were able to get about $5 billion worth of cash and securities and crypto. And now they're talking about selling off these assets as well. I mean, I would assume that they could get some pretty decent money for some of these entities. So if they got $1 billion or $2 billion out of this, just spitballing here, and they have a $10 billion shortfall, well, that's 6 or 7 billion. They can pay 60 to 70 cents on the dollar for their debt. So that would be good news, I think, for anyone that holds, obviously, crypto still locked up on FTX. Hopefully this continues to happen. They continue to find more and more assets. Maybe their shortfall isn't as much as people thought. Now, it seems really like the market is shifting from talking about inflation, because inflation is now coming down, to now talking a little bit more about recession and what could happen. I mean, we're seeing a lower demand on premium vehicles. We have some of the major banks today announcing earnings and talking about increasing their credit reserves for default risk. Let me know your thoughts about this underneath the video. Do you think that's going to be the next narrative in the market, talking about recession-proof cryptocurrencies and recession-proof stocks and who has pricing power? Let me know in the comments section. Thank you so much. Again, check out the links underneath the video, and I'll see you in the next one.